One of the biggest mistakes I see people doing is that they buy annuities without really understanding what they bought, seeing if it fits their financial needs of what they want. But here's what we have the good news today is a lot of people think that's it, game over. I'm stuck with this thing. I've got to ride or die with it for the next 10, 15 years. And we're here to let you know that's not true. There are options, and we have a great option for you to get out of that annuity. Coming up, we're going to look at one of the biggest mistakes that many pre-retirees feel that they make and what you can do right now to fix it. That's coming up. Hello, everybody. I'm Ben Mohr, the host of Truly Diversified. Thank you so much for joining us today. I want to focus on one area where I see is a major mistake that a lot of people make heading into retirement. And this is going to be a bit niche, a bit focused, so just hang in with me there. Even if this doesn't affect you today, it will be a great idea and warning sign and some education on what not to do. The big word of the day today is going to be annuities. I know we focused a lot lately on retirement plans and the stock market, but one of the most overlooked areas that is controversial is buying an annuity. And then you can go back and listen to one of my previous shows where I kind of break down the myths about annuities and how mainly it's focus driven by salespeople. I wouldn't even call a lot of them financial advisors. The reason being is you have to have an insurance license to sell this. And I'm not knocking my friends out there who have insurance licenses. There's a lot of good people out there, but it is a fairly easy license to obtain. So the education level and the experience isn't really hard to have. In that case, then you are getting in front of a lot of people who may not even know what they're doing, and they're just selling the product because it's a commission-based product, okay? So we want to start here. I'm going to go with a big mistake that I see with a lot of pre-retirees is dealing in annuities. Because what happens is you get these mailers that come to your house, tell you to go to some dinner seminar, or maybe you have a cousin who refers somebody to you and you wind up sitting in front of somebody and all of a sudden they're going to tell you that buying an annuity is the greatest thing you could ever do for your retirement. So I want to be very clear here. I'm not pro-annuity and I'm not anti-annuity. The problem I have is that the people who are selling them as a whole, a lot of them are unexperienced, untrained. They don't really understand what they're selling, or they're just unscrupulous and they don't care. They're just going to sell something to you whether you need it or not. They kind of believe that the annuity is one size fits all, and that couldn't be farther from the truth. Now, why would somebody buy an annuity? The reason that anyone would want to buy an annuity is because you're buying a product from an insurance company. They give you guarantees. If you buy a fixed type of annuity, and what we're going to focus here is fixed indexed annuities, meaning that you're going to give an insurance carrier money and they're going to hold on to it. And then the plan is for you to hold on that money for 10 years and then turn it on as a guaranteed payment for life after 10 years. That's what's known as an FIA, or fixed indexed annuity, or also known as a deferred annuity. Now, the way this is supposed to work is there's a crediting method, let's say based on the S&P, and they give you a cap. So what happens is maybe the cap is 5% or 6%, meaning that if the S&P goes up in 10 years, they'll give you up to 5 or 6% in that year. So you don't get all the gains, you get some of the gains. The other side is if the market drops in a year, you don't lose any money, okay? That's where the guarantees come in. And no matter what your amount is that you have in the annuity at that time, that's as low as it can go. It can't drop if it is a fixed annuity. If you have a variable annuity, you could lose money. You need to be careful there, okay? We're just talking about fixed indexed annuities because it's by far the most popular product out there being sold by insurance people, especially at your average dinner seminar. Okay, so the issue here is, yes, it can be a nice, steady, stable, boring kind of plan that if you say, hey, I'm 60 years old today, I want to put $250,000 in this fixed indexed annuity, your income value, not the actual cash, but the income value could be roughly about $500,000 by the time you're 70 in 10 years. Now, what happens is you're going to start taking an income from that, and it's probably going to be in the range of about $3,000 to $4,000 a year. The easiest way I explain it to people is that you're really putting together a self-made pension, and it will complement the Social Security you're making. Again, what I told you, it's not sexy. This is not a product where you sit there and go, I'm going to make a ton of money. I'm just taking money and it's a safe product where I know I can go sleep at night when I am 70 years old. And I know that that money is going to be there because it's guaranteed and backed by large insurance carriers. Okay. And you don't have to worry about that. That these carriers are very, very strong. The ones that sell these, we're talking billion-dollar companies that have that guarantee, and they're regulated by the states to make sure they have that money. That's the only reason you would want to buy one of these things, is that if you think you're going to want to supplement income with your pension where you worked at before, and if you have one, and then the other issue is with your Social Security, you could add on probably $3,000, $4,000, $5,000 additional in income. I have no problem with that. See, I don't have a problem with the product. I don't have a problem with the insurance carrier. The problem I have is you go to one of these dinners and they're going to tell you that you're going to make stock market like gains without having any loss. And that is farther than the truth. You're going to be making half of those gains, maybe 60% of those gains when the market does well. And then, yes, not lose money. The way it is rigged. They're never going to produce a product that's going to average 10% a year. Okay. They're going to have a product where it averages maybe 5, 6% a year, could be 4%. And that's a fair deal because you're getting safeties and guarantees. The problem, again, is that they're overhyped by these agents because they're taught not so much to explain the intricacies of the product. They're there to show you all the bells and whistles that make it look good so that you will buy that product, they will get paid, and then that's it. Here's where the problem stands. And to this day, I talk to people almost every single day who say they wish they never bought the annuity. And the reason is A, maybe they didn't need income, okay? Or number two, they were expecting 10% returns. They were expecting a higher return, and they're looking at this product going, I'm not really making any money here. I'm not seeing where this guy told me. I looked at the market this year. It went up 10%. It went up 12%. I made 5%. I made 6%. And they're frustrated and upset. And they've sat there and said, I don't want to be in this product. Here's the problem. When you buy these types of products with this kind of FIA, fixed indexed annuity deferred program, almost always the surrender period on these things are going to be a minimum of 10 years, could be up to 15 years. And that surrender penalty can be as high as 10 to 15% to get out. So if somebody put in $250,000 into one of these things, they could be looking at a surrender penalty of $20,000, $25,000. That's a lot of money. So now you're stuck in this thing. It's not working out how you expected it to because the agent, right, went out and overhyped this thing. So now you're upset. It's an emotional reaction, right? You just feel that you were lied and duped and that you didn't do your homework. I see it all the time. It's the people are really more angry at themselves because they went to the dinner seminar and they thought all this was great and they feel like they didn't ask the right questions. And I always tell them, I don't think you should be to blame here because the inside workings of annuity are fairly complex. They just try to make it seem so simple because they just want to give you the highlights so that you'll buy the product. The problem there too is because these people are commission-based up front, they don't really have any inspiration or means to want to help you work the annuity after you've bought it. The standard play by most of these agents is once they sell it, they're going to come back to you for a review a year later or 2 years later. And really what it is they're looking at it as an opportunity to sell you something else. Maybe it's another annuity. Maybe it's a life insurance plan. Maybe it's, could be anything else that has to do with insurance. Long-term care is another one. So they'll come and sell the annuity and then try to sell a side product. Once you're seeing year 2 or 3 and the annuity's not working the way you thought and you start asking the hard questions, guess what? They don't call you for the annual review anymore because you didn't buy the other products and they don't have any kind of reason to come back and help you. I think that is wrong. But again, they made their money, right? If they sold you a $250,000 annuity, they might have made as much as $15,000 up front on that deal. And this is where annuities get a bad rap because people say, hey, bottom line is this guy made too much money up front. He didn't help me maintain the annuity when I had it. I'm not saying there aren't people out there that I have a lot of friends in the annuity industry who are very good. So if you are actually looking at trying to get an annuity, I've got names here. I'd refer people who I trust with my life because they are fair, good people. They're only going to give you the annuity if it's something you need, and they're not going to try to overhype it. So again, here's the mistake. People then sit here and go, well, I feel stuck. This is where at our company, with what I work with, Life Asset LLC, we can help. We help people with this all the time. They come to us and go, I'm not making the money I thought I would. I felt duped, and now I've got this huge surrender that could choke a horse. And we say, well, we can actually help you. We do it all the time. We call it the Annuity Rescue Plan. Okay, we cover a lot of content on here, and I'm always asked this important question: where do I start? What is a good first step? Well, if you're looking for a way to diversify your retirement away from market volatility and still get competitive returns, I want you to watch this free on-demand training. In under 30 minutes, I will walk you through the exact strategy that smart and wealthy investors like Warren Buffett have used for decades, and they do it by investing in what's called life settlements. We'll break down how this works, real case studies, and how you can add this market-independent asset class to your portfolio without having to lock it up for 10 to 15 years in some low-performing annuity. You will learn how to build stable, predictable growth and, yes, get true diversification, especially in today's uncertain environment. All you have to do is go to lifeassetllc.com/webinar. Again, that is lifeassetllc.com/webinar, or you can click on the link below here and watch it now. It is completely free, and I think you'll find it will be a game changer on how you think about investing for your retirement. Okay, now let's get back to the show. What we're able to do is move people out of the annuity into alternative assets like what we deal with, like life settlements, and put them in there. Right now, I can show you that life assets, and companies like that, the product they sell, life settlements, on average is making 2, 3, 4 times on average more than what your annuity would make in a year. As a matter of fact, we just had Barry Neal on, who runs a company in California, Equilife. Their clients are seeing this year, double-digit returns from life settlements. So if your average annuity is making maybe 4 or 5%, you can see that on average, he's doubling, tripling the amount of money that he's making for his clients. What's the connection here between the two? People put their money in annuities because they don't want stock market risk. They don't want to lose money when the market goes down. Well, guess what? Life asset or life settlements, the money doesn't go down when the market goes down because it's not correlated to it. So that's the one thing they do have in common is your money won't be at risk in the market, okay? The other thing here is with life settlements is that they're not correlated to anything like the economic woes, ups and downs, political stuff that's going on in Capitol Hill, and of course, worldwide events. And we've got a lot going on these days. War in Ukraine, we've got the stuff going on in Palestine, Gaza Strip, pandemics can happen at any moment. That's what's great about life settlements is none of those things will affect it. You own a piece of somebody's life insurance. Look, they're either alive today, it keeps going. The moment they pass away, you're going to get paid. Matter of fact, we talked to the CEO of Equilife the other day. They've paid out nearly $5 million to their investors this year. One time it was an APR of 10%, another was 12.5%, and they're doing another payout now for nearly $3 million where their clients are going to make almost 20% APR. Okay, so this is a good solution to take you out of the annuity and put it into something that has much more earning potential for you. You're going to be in 5 or 6 policies, so you're not just waiting for this 10 to 15 years like in the annuity. You're going to get different payout opportunities along the way, so your money will come available to you most likely more often. The problem here that, of course, if you have an annuity at home is going to say, well, okay, but I have this huge surrender penalty. We have a way to figure that out. It's simple. The little math here I want to show you. Let's say somebody had a $100,000 annuity, right? So if they have a $100,000 annuity, we'll just say that they had a surrender of $10,000, meaning when they go to the insurance carrier and say, I want out, with that $100,000, they're going to walk away with $90,000. Right away, you're going, this is a terrible idea. Hold on, give me a second, trust me here. Well, if somebody came off the street and invested $100,000, let's say with a life settlement company, they might own 5 or 6 policies, and their total return on this is expected to be $175,000. It's a 75% estimated return on what you're getting. So you understand, somebody comes, buys 5 policies from me, they put 100,000 in. At the end of the day, it's 175 estimated, okay? That's 75% return, simple math. The problem is that if you give up the annuity, you only have $90,000 to play with. 75% on 90,000 is more like 157 is what you get back. So you can see it's a drop of almost $20,000 in earnings. So you go, this is a terrible idea. I lost $10,000 up front, and now I'm getting less than the guy over here because I was in this. Here is the critical thing, folks. Here, listen to this very closely. If somebody comes to us with an annuity and we are able to establish that they had to pay a surrender penalty, meaning that they had $100,000 in the annuity, and now today they have 90, we're going to give them the 175. Do you understand? They're going to get the 175. We're going to look at it as that they had the $100,000. So yes, they paid the surrender penalty, absolutely. But at the same time, they're getting the same purchasing power as if they had $100,000. They don't lose on the back end. We make it up for them. So think about that. If you're sitting there with an annuity right now and you had $100,000, but you go, yeah, but if I walk, I got 90. Well, what we're saying is no, you're going to make the same amount of money as somebody coming off the street with $100,000. That is a great value for you. Now look at this. Did we provide the solution? We did. Your earning potential right now in the annuity is low. If you go to life settlements, we've shown you that potentially you're going to make 3, maybe 4 times as much. Is all your money stuck there for 10 to 15 years like it is in the annuity? Most likely no. You have 5 different policies. Every time a policy pays out, you now have more capital that came out. So you have, your money's been divided up. It's been diversified over 5 policies. Much more opportunity to get your cash earlier, right? And the other thing is, what you did like about the annuity was that it had no stock market risk. Well, guess what? Life settlements have no stock market risk. So you're not losing that aspect. You're finally able to get out of the trap. And we do this every single day. Now, I know the math I just went over could be slightly complicated, but this is why I implore you, if you are listening to this show today and you have an annuity and you feel like you're stuck and you are absolutely just confused about what you have and feel helpless, this is where we sit down and analyze that annuity with you, show you what you have, and then show you why it's a great move to move over to life settlements. If you know anybody, whether it's an uncle, a parent, or anyone who has an annuity and they don't know what they have, we'll review it for free. There's no cost, no obligation, and we will look it over for them and then show them by moving it to life settlements why that is a great way to finally undo this mistake of getting into an annuity that you didn't understand and probably didn't want, that's showing low returns and a long surrender period. So again, with us, you can go to lifeassetllc.com. You can book an appointment on there with us. Yes, you will be talking directly to me, the host of this show, and we will look over your annuity and figure out what's the best option for you. Okay? So that's what I want to let people know today, that yes, one of the biggest mistakes I see people doing is that they buy annuities without really understanding what they bought, seeing if it fits their financial needs of what they want. But here's what we have the good news today is a lot of people think that's it, game over. I'm stuck with this thing. I've got to ride or die with it for the next 10, 15 years. And we're here to let you know that's not true. There are options, and we have a great option for you to get out of that annuity. So if you're listening today and don't have an annuity and thinking about getting one, you can contact us. We will walk you through to find out if that's something you really need and make sure you understand it. So if anybody out there is trying to sell you an annuity, come to us. We'll review it for you and tell you if it's a good idea. There might be better plans out there for you. And at the same time, if you're stuck in an annuity, we have plans to help get you out. It's just a quick chat. So again, here today, it's all about being truly diversified. And this is one way that you can finally get out of an annuity trap and diversify your money. Much more potential for upside as far as making money, and then not having to deal with the frustration you've had over this time being in that annuity. So just food for thought for the day. I appreciate your time, everybody. Again, just an idea about this. Don't make mistakes. Ask those questions the best way. Be knowledgeable. Ask questions. It's your money. Be smart with your money. And of course, be truly diversified. Until next time, I look forward to talking to you.